Let's start things off with a look at just generally the headwinds facing economies here, and the chief one amongst them is surely inflation.
Well, I think definitely for sure. I mean, Korea's inflation continues to remain fairly high. The headline, of course, at about 4.4%. And again, of course, last month, we did have the Bank of Korea surprising markets with 25 basis points of interest rate increase. So after, of course, pausing for a couple of months. I think going forward, we're still likely to continue to see the Bank of Korea raising interest rates perhaps by another 1 or 2 more times, which will, of course, raise the benchmark interest rates up to a level of 3.5%, 3.75%. But then I think at the point in time, the Bank of Korea will feel fairly confident that interest rates have returned into positive territory on a real basis and possibly pour on a more sustained basis going forward after 2 more hikes or so.
Okay, well, just also, we just had data coming through Indonesia as well. Month-on-month, 0.55% month-on-month key inflation. That's a month-on-month thing I should reiterate here. So, Joseph, what do you make of that? It's just a breaking news story right now, but it does highlight what you're talking about.
Yes, I think what we are seeing still are remnants effects of some of the higher fuel prices that we saw at the start of the year. And of course, food prices continue to remain fairly high in Asia. And of course, this certainly means that, you know, in terms of the Bank of Indonesia's monetary policy stance, we could possibly get another 1 more interest rate increase from the Bank of Indonesia. But it's very interesting to note, of course, that the Bank of Indonesia has, up until this point, used its currency as a means to control inflation in terms of imported inflation. And that, of course, has actually seen relatively less interest rate increases from the Bank of Indonesia compared to other central banks in Asia. And so far we're seeing, of course, the interest rate hasn't really been jumping as sharply. Inflation as well also seems to be fairly well contained in Indonesia. So it seems to be working there for the Indonesians, and certainly we're not looking for very significant rate increases from the Bank of Indonesia.
Joseph, but you know, if we take the year-on-year figure in Indonesia, it's 5.5%, which is essentially what we have in terms of Chinese core inflation as well. Now, we've seen the impact in China. We had the Purchasing Managers Index for the manufacturing side of the economy out earlier, falling back much more than economists had thought, albeit still growing. That's the danger, isn't it? It's a choking off of growth.
Well, I think this is, you know, the data out of China this morning clearly requires a bit of explanation. If you look at the history of the Chinese PMI, typically between the months of May through to August, the series, even though it's seasonally adjusted, goes through some form of seasonal weakness. And hence, this does not come across as a huge surprise to us. Indeed, of course, once we pass the month of July, we are actually looking for these series to rebound again. Potentially, of course, the slowing down of manufacturing activity, industrial activity in China can also be tied in with power rationing, because once we get into the summer months, the demand for power actually increases, power rationing kicks in, and of course that actually takes a bit of steam out of the manufacturing sector as well as the industrial sector. But I think going forward, it's a very clear point to be made that if you look at all the Asian central banks in Asia, in terms of the number of interest rates that they have cut since the crisis started in 2008, and you look at the number of interest rates that has been raised since the recovery has started, is essentially half. We are at this point, and we're still not seeing a significant aggressive monetary tightening from Asian central banks. I would still very much regard this as a normalization of interest rates in Asia, certainly not to the point that it will choke off growth. In terms of Asia-Pacific growth for this year, we are only looking for Asia to soften from a 8.8 on average last year down to a 7.8 for this year. So definitely not looking for a hard landing in Asia.